Good morning, everybody. This is Dee Dee with Power of Three Trading. Thanks for joining. I'm not here just to teach you the strat, but how to execute on the strat techniques. If you have any more questions regarding the strat, please reach out to my guy Rob Smith at Smiths in the Black channel, Rob in the Black on Twitter, or at cpogroup.com. So yesterday, we'll start with our trade. We had Nike that we charted for vid, and I had said I was not going to trade Nike if it goes back inside the previous day. And I'll show you, if you are trading the open, what you could have done, but it wasn't for me. But it certainly did meet my criteria. So, and we'll talk about it. All right, so let's start with a quick review. This was basically what I said was, because I wasn't looking to go long here, but I'll show you how you can scalp intraday using the outside bar, which I think I talked about when Jermaine and I met on the weekend shift. So short below 102.75 with CCI, below negative 100 on 18. That's our process for today. Our target was to we were looking to trade down to this 99.89 level, but our setup was we had to wait for price to trade below 102.75, which it did. But we needed CCI to be below negative 100 on the 18, right? And then, of course, my process is wait for the 15, 18-minute flip. So what does that look like, guys? We see what happened here on the open. Price traded down, created an outside bar, then a small body doji. If you followed me at all, you know when you see 3 2 2s, this would be a scalp trade using this guy as our target. If you are trading the open, that's not my strategy, but if you are trading the open, I would say every now and again, I may do something like that. And if you were so if you were looking at this and you saw this move, you absolutely right here, and if you had waited on the 15-minute flip, let's see if you are a 515 person, see what that would look like. All right, and so that actually doesn't look as nice. I just don't like the fives. but if you waited for the 15-minute flip, which is the way that would have worked, you would have let this TTO, because it's an outside bar, if it did that, I'm not sure. So let's see, this is 103.38. The open was 103.33. So I'm gonna go down here to the minute chart. Let's just look for grins to see if it TTO'd. It did, right here at the open, right? So this is your 15-minute flip. It came down, then it came back up. You could have taken that at the high here of this outside bar. It crossed over, and this is what I mean when I say, if you were trading this at the 15-minute flip, I certainly wouldn't be getting in before the 15 minutes, okay? It crossed over the zero line on this move to the upside. So it met my criteria, right, for reversal. Okay, so this is a reversal on this 15-minute. It traded down, came back up, so 3-2 up. Now, I didn't take that trade, but what I want to show you, I'm gonna just flip back over to my 618. After that, right? So if you were, and of course, if you were getting in here on the 6 minute, you could have actually entered that early, and use this as your stop. Because when I see this setup, I'm using not my broadening formations, I'm using this 6-minute scalp. So it's totally different trade setup. I'm just using this right here. I'm not looking at anything else. And I'm looking at my 6-minute chart on a 3-2-2. I'm looking to get in and get out. That's how I scalp. I look at the shorter time frame on these 3-2-2s. 3-2-2s. You can scalp those all day. I personally don't like to trade the first 18 minutes, but if that's how you like to trade, what I would recommend is looking for these outside bars, looking at the 3-2-2 reversals with CCI crossing back up above 100. That'll give you, at least on a short term, that will give you confidence that this move is going to continue to at least take out your target there. Okay. So what happened the rest of the day? Not a lot, guys. If you then got stuck in here, so again, looking at CCI in the shorter time frame, not a lot of movement. Looking at your 6-minute, okay, once this starts crossing back down, you make it a little bit of move, a little move here, but your volatility is probably starting to decline, which means your options value may also not be as profitable. So you're not going to get a lot of delta, or if your implied volatility is still high but volume is low, you're probably not going to get a significant move in here. So that's just something, if you're trading options, you want to be aware. If you're trading common, you can do this all day long. But if you're trading options and you see your CCI starting to come back inside plus or minus 100, then your premium of the value of those options probably won't move as much. So you'll want to pay attention to your delta to see if it's declining, and your implied volatility. So I would not have traded this, but then here you are in your 90-minute flip. Why am I looking at the 90-minute flip? I love to trade 90s because they give me the best opportunity for reversals. You had essentially 3 30-minute candles to the upside. Now we're looking for a reversal to the downside. Here is where I would have taken this, right? Because you have this shooter crossing back below 100. CCI is still, it's right on the line there, negative 100. But we know that you had a big our outside bar here in the daily. I have no illusion that this is going to go straight up, but I am looking for a short. So in my view, when I see this short below 102.75 and price trades up, it doesn't meet my strategy for the day. So I set up my strategy. Here's the process. I'm looking for this to trade below negative 100. Else I'm looking for a reversal back to the downside. We have some confirmation here at 11:54, but you can see it just traded in a tight range after that, guys. So it moved back below back below 0. And this candle here on the 18-minute, it moved below 0 over here early. But you want to catch this. If you're going to catch this reversal on the 90-minute flip, these are the signals you want to look for. Okay, I'm always looking for what we call morning star. This is your morning star. So you have a shooter at the bottom, doji at the bottom of this range, 3 doji, 2 up, morning star on the 6-minute. And then you can see here on the 18-minute, but you had a 2 up, a 2 up, doji comes back in. I'm looking to take that short, and this would be my target, okay? When your other strategies aren't in play, meaning you don't have your simultaneous breaks, market is in conflict because you're green on the day. I'm just looking for scalps, and the trades that I prefer are the morning star and the evening star. This would be an evening because it's to the downside. This would be a morning because it's to the upside. Okay. But I didn't trade Nike. And then you'll just be looking to move your stops if you're going to try to hold this throughout this 90-minute candle. But that's where you would get in, right at this, the low of this doji, and then the high of this doji would be my target, right? This short-term range, short range here. I love those doji moves. But what I did get into was, of course, in my trade, my cash account, I'm always trading Tesla because I have a challenge, personal challenge. And so I'll show you what I did here. I drew up my target, my broadening formations, quite a few lines. So let me just blow this up real quick. We went out to look at Tesla. Why? Because it was gapping down. And so we wanted to go out to see where we were going to draw those trend lines on, looks like we use the daily and the 90-minute. But here was a trend line we did on the daily, these two downs, because we knew if price was going to trade down, we had to take the low of these ranges. And so that's this range here. And I think we did maybe a horizontal line here straight across to take this 2-down candle here. And then of course we had this range here we had to take out. So we drew that broadening formation. It never got lower. I think we went way back to draw some horizontal lines way back here. So let's just talk about how I traded that. And then we had to take the low of the day. So that was this 90, right? And this 90. So here's how I traded it. Guys, again, I'm not interested in getting into the market in that first 15, 18 minute, right? And I say 15, 18 minute because there may be something that I like right at the 15-minute flip. But here is, so I'm on the 6 and 18 because this is a gapper. I really want to see price trade 2-2 for continuation. But it went 2 down. Excuse me. Excuse me. It went 2 down, 2 down, 2 down. All right. So what does that mean? In your first 18 minutes, I did not get my signal. Now, if we flip over to the 3-minute chart, I saw this inside bar and I was like, yeah, you know, you could get in here, take this move down, use this as your target, right? So again, this is our broadening formation. We were looking to target. And I didn't take this move. And the reason I didn't, guys, was because I didn't like CCI trending up. And so yeah, experience has taught me that these inside bars, when CCI starts to trend up, can, not always, like it didn't this day, but it can go 2 down and go 2 back up the other direction at that flip. But this was at 9:39. So again, when things occur matters. So the 15-minute flip didn't happen till here, but I didn't like it, so I didn't take it. All right. So instead, I went back to my 6-minute and I said, you know, I'm going to wait because I did not like the CCI trending up. So again, you have your flip here, price goes higher, but it didn't meet my target. So unlike Nike, where you saw CCI trading back above 0 and then above plus 100, right? You could have taken that. That wasn't the case here. So I'm always watching my CCI, and there was no momentum to take this 2-2 up. to take this green, the day green, because CCI never crossed back above zero and way below -100 on the 18, right? So guys, I'm looking for a short. I'm not looking to go long. Nike was an opportunity because the momentum took it up. Tesla was not. And so that's what I want to really compare, contrast here for you today, why Nike probably worked if you had gone long and why Tesla would not have. So I shorted Tesla. Remember I said I like my dojis. Here was the 18-minute flip at 10:06. It went 2 up, created a doji here. I took the short of this doji as soon as it crossed below this range. So 2, 2, 2, evening star, traded back below this range, looking for it to take this target. It did not. Here's my 18-minute flip. So I have this outside bar here, guys. 18-minute flip, I'm out. As soon as it came back up inside this range, I took profit on this 18-minute flip, right? So now I have a 3 down, a 2, oh, a possible morning star, 3, 2, 2. Again, I'm going to show this to you again. Why Nike worked with CCI crossing above zero line and why Tesla did not. I'm not taking this move. Tesla is well below -100. I'm still looking for shorts here. I'm still looking for shorts. I missed this opportunity here. So Tesla did trade 3, 2 up right here, but there was nothing to convince me this was going to go higher, right? Because it hadn't crossed over. So but I wanted to short this and I saw the time. I was like, you know what? We're right at the 90-minute flip right here, last 6 minutes in the 90-minute flip. I decided not to take this trade and I missed it. Hindsight is 20/20. So I'm very real about and patient with, I try to be patient anyway. I will show you what mistakes I made trying to go long, but I missed this opportunity here. So left some money on the table, okay? Now here's the next move, and I'll tell you why I made this mistake. So I am testing out another strategy that I'm not going to discuss here on video because I don't want people to try to do it. But I immediately realized my mistake because I didn't have confirmation. So Tesla had crossed it back above -100. So that's a potential reversal once we see Tesla crossing back over. When I say potential reversal, meaning the short move may be over, maybe not. You have to look at what's happening in the broader time frame. So what I did was testing something else. So it did not follow my normal strategy. Tesla had started to creep back above 100 on the 6-minute, and I saw this 322. This was 2 to the upside. This was creeping up. It was a little higher. It's pointing up, so you can't really see it because it come back down with this move. I tried to take this 3-2 up right here, but I didn't get my signal. I jumped it because this was the 90-minute flip in here. Hang on. 11, so 11, whatever, 11 o'clock. Where was 11 o'clock? Okay, so here's the open. So the open was 675.86, and I saw this turn the 90 green. I was not paying attention to my CCI. So I saw this turn to 90 green, and I was like, let me see if I can jump this in anticipation of a reversal on the 90. It did not work, guys. So I lost money. I lost money here, I think almost $100, because as soon as I saw this come back in, I was like, And this is really my message on this. Even if you try to jump a trade anticipating a move and it fails, you have to exit these trades quickly, right? because when I looked at everything else on all of my other charts, it's like, Dee, you don't have the reversal yet. This is still a short. So I jumped back in as soon as it went 2 down here. I jumped back in. Actually, when it took this 2 down on the 18, I jumped back in. I recovered. All right. So I made up for that loss, made a few extra dollars. So I basically covered that loss. So I was good there. All right. So price started trading back up. I got out somewhere in here. I got out. I think I just covered my loss. This started coming back up. I think I exited, came back down, and now you have the 90-minute flip. All right, so I'm gonna go through what I did here. Again, testing something else. Now I get my alert, but I wasn't patient enough. So now here I'm looking at Tesla crossing back over my my trend line. And so what I did was I took this position right here. It went outside, so it went 3 and came all the way back down, guys. So I ended up losing here. So another loss, only for it to go 3, 2, 2 down and back to the upside. And so you can see here, the 90 is green. So the direction was right, but my timing was off. And so I took another loss here, but here's the 90-minute flip way down here, right? So we're green now. So we have confidence that the market is probably reversing. For you guys who have followed me for a while, you know, I love my 1230 flip, right? Because again, 1230 includes, I won't, yeah, I've done it on other videos. I won't do it again, but the 1230 is the bottom of the hour, right? So that's also your 3-hour flip. So you had a lot of activity in 3 hours. And I tell you this, the time, I don't know about you guys, but when I'm trading, the time seems to just fly by. So we're at a 3-hour flip here. So I like my 90-minute reversals off that 3-hour flip. And so anyway, so I got in, got triangled out. I got back in here somewhere. I think I got back in here when it crossed back above, but it came back in. I didn't hold it. So I got some of my loss back, but not all of it. But we were green for the day. So we made a few dollars, and so I was happy, but didn't meet my goal. So my message today is really about how, so if you look at it, I had 1, 2, 3, 4, 5 trades that I put on today. And 3 of them were winners and 2 of them were losers, but we still made money. The way you do this and stay profitable is you have to cut those losses. If your losses, if you only had 3 trades and 2 were winners and 1 was a loser, but that loser was significant, you went red for the day and you did that every day, you're gonna go broke. You're not gonna be able to stay in this game. All right, so the key here is, and my message for you guys today is, you have to recognize when you enter these trades and they start coming back in and you're like, God, you gotta exit, you gotta exit. This guy went 3, and I actually should have exited this sooner. Maybe I would have been able to recover, but I was debating on whether or not I was gonna hold it to this range. And if I had, honestly, I would have gotten lucky, meaning I got in here and it traded higher. I would have actually made money and I wouldn't have had a loss posted. All right, I would have actually made money if I had held it. But because I failed in my strategy, and I don't know if it's gonna recover. I know it's green on the 90, but that doesn't mean it's gonna stay green. So I had to cut that. I had to cut it. And so really my message is, have your plan, focus on that plan. When you make a mistake, because it happens, all right, we're not perfect. When you make a mistake, exit immediately, recover, right, and get back into the game, all right? And that was what happened yesterday. and we still, made enough money to where if I just did that every day, right? A few $100s a day, I think a lot of people, depending on your debt, I think a lot of people could live off $300 a day, right? So just think about, or 250. Let's just think about how you're trading, what your strategy is, and just be patient. All right, so what's happening today? The market is full of noise. Look, guys, it's Friday, June 30th, last day of the month, last day of the quarter. We have some gappers, right? We have even more gappers. I have plans for the holidays, so I probably won't do much in the way of trading. Let's just talk about, and then I will, I'm looking at the chips. So what I'll do is I'll do a chart of NVDA, but let's just look real quickly here, broadly. The Qs certainly look like they want to take the week, right? The Qs certainly, I'm sorry, it's not Friday, today's Thursday, but it's the last day of the month and the quarter. But the Qs certainly look like it wants to take the week. I don't know, we'll see. It's gapping down, right? So you had this 2 down, this little doji. And we still have, over an hour, right, before the market opens. So let's see how this looks, but this is day 1 of our three-day chart, right? And so it's possible 277.91. It could take the low here. Right now it's at 278.99. So it's certainly possible the market will gap down, take the week, but just be careful, guys, that this thing doesn't reverse on you at the open. SPY, same deal. You had a 3-2 down. We have this level here, this range. It's got a little ways to go to take the week out. 370.18. It closed at 380. That's a 10-point move on the SPY if it's going to do it today. So I'd be careful. Remember, the week doesn't end until tomorrow. So be careful if you're going to trade this open. Gappers, I look for gapper reversals. Certainly, if it's going to continue, similar to what we saw in Tesla, what I just described, I'd like to see that go 2 up and then come back down, okay? On those gappers, I'm not looking to take that at the open, okay? And let's look at the SMH because the chips are getting hit. The chips are getting hit. This is you're 3-2 down. It looks like you're gonna take this guy here, or this guy at the open. Looks like it took it yesterday. And then your possible 3-2 on the 3-day. You're already outside week, guys. So you're inside November 20 month. You're at the low of the month. We'll chart it. We'll look for, so Micron reports today, but the volume on Micron is pretty low. It's lower than what I'd like to see, so I don't trade it. But I know they report today, the chips are getting hit. So we'll look at that. What else is on the screener? So if you guys are interested, so these are chips, right? Applied materials. There was NVIDIA. I think I saw earlier, AMD on here, but maybe it's not. It probably, again, stuff is moving around in futures. But AMD, it's down a little bit, just not as low as it probably was earlier. So let's chart NVIDIA because that is the one chipper that does move that I like to trade. And let's see if we can get a move here. So keep in mind, guys, this is, I'm gonna just flip it on the daily real quick, okay? This has had a 2 up two down, two down. It's already at our monthly lows, right? I think there was a view for some of the analysts or what do they call those guys? Contributors on CNBC, excuse me, that had suggested that the market had put in its lows for the month. Yeah, no, the market decided it had not. So we are at monthly lows, guys. So what does that mean? Does it take, and so I'm just looking here. If we're in pre-market, so I'm looking at the daily. This red line is where it closed yesterday, okay? This little orange line is in our pre-market. So May 21, it gapped up. So will it take this gap? I don't know. We have we have this, yeah, this range is right between this gap. So this little doji here is at 149.71. The low here is 148.69. So the high of this doji is inside this gap, and the low of this doji, 146.72, high here, 146.84, is right in this gap, guys. So this is where this is going to be our target area. Can NVDA take this gap? All right. So the way we're going to draw it, so we know we're already in here. This is the low. I'm sorry, this is the close. So what I'm going to do is I'm going to draw our first broadening formation on the low of this, because we want price action to take this low, which is 154.60. I'm sorry, 154.60, 156. Let me get another. Yeah, no. All right, so we're going to go 156 on this guy. Um, 154.82. All right, so I don't know if I like that angle just yet. Yeah, so we'll see. We'll probably draw another line. I don't know if I like that angle. Okay, so that's going to be this range here. If it takes out this range, but see how this is sitting inside this range, and you can see where it's trading. So I may do something else with that line. So we know it's right here at pre-market. So I'm going to take this guy, right? So it's got to take out this range. The low here is 151.76, 152.16. All right, so we know price has to take out that range. Okay, so I like that. So if it takes out the low of the day, this will probably be our first target. This is where price is trading right now. All right, close to that level. And then we have this gap. Okay, and so we're going to take the low here, and let's see. Inside. There's an outside that's too low. Let me look at this. So low here is 148.69. That's all to 149.97, 148.47. Too low. 149.63, 149. Here we go. All right, so that's going to be our next target. So if it takes this, right, that's where we're looking for it to take this gap. Now we got to take this 2-up bar here, and then we're back inside these ranges. So if it takes this low, this 2-up, then we'll be looking for it to take this guy here back down to 140. Yeah. 144. All right, so this level here, we're just looking for it to take out this guy. And that'll put us down inside this range here. Yeah, okay, so let me just look at this real quick, because when I see these big, oh yeah, no way. So when you have those types of angles, we just do this. This guy I like, this guy I do not like. All right, so we're just gonna do this. All right, so that'll take care of this guy. So it's got to take out that level, this level, and then now you're inside these daily ranges. I don't have good broadening formations for these, using my outside bars, so I will not draw them that way. Let's see if we can get, because it's got to take this guy, you got this 2-up guy here. Okay, so let's go back. What we're looking for, because those are pretty tight ranges. I'm not expecting it to go down to 143, 130, but what do I know? What do I know? So we're just gonna take this way, like we did the other ones. All right, 143. Those are all very tight ranges. We don't need all these lines, to be honest. We don't need all these lines. I'm going to delete that one. I think if price action broke below 146, which will be our first target. Yeah, no, I don't like it. I don't like it. So this is the daily. It's got to trade below this level here. If it breaks this range here, this will be our first target, about 146. What is that, 145? And then we have 143, very tight. And there's a reason for that. You're in this range here. These are a very, very congested area. I'm gonna move this guy. I'm gonna move this guy. So if it takes out this range, you'll be inside this range here. This is another 2-up though, which is why I liked it. Yeah, I don't know. We'll leave it there. If it takes out this area though, hold on one second, 146.72. What was this? 146.89. Okay, perfect. All right, so I'm gonna make a change here because that's gonna take that guy. I like this better. Okay, yeah, the high of this guy. That's the low of this guy. Yeah, I don't know. I think we just need to be careful. If price starts trading back down, just know that it's got to take out this gap. I'm trying to cover this gap. We have it covered here. That would be a high, which is why I'm like, I don't think we need it. I'm looking for another area that this could possibly take. This is a 2-up, so 2-up. Here's a 2 down. Here's a 2-up. This is the low of this bar at 140. Okay, all right, yeah. I think I like it. So I'm gonna take this 2-up because this broadening formation here we drew. Okay, so this is 2-up to this 2-up. This actually will cover, the broadening formation is gonna cover this area in here. If it trades below this range, so you can't see it, let me bring it back into, you see what I mean? So this is going to cover this range right in here. So if price takes out this low, right, trades below this range, we're inside here in this gap. I don't see it. Yeah, I don't see it. All right, stop fooling around with this. If it trades below yesterday's low, I'm gonna do this. I'm gonna have to do it. I need it to take this low. This is the gap, guys. It has to take this low. So 148.69 will be our first target. So if it trades below yesterday's low, 146.869 is going to be our first target. Then that's the low of the gap. This is the high of the gap, which is 146.84. $146, that will be our next target. This will be 145 would be this. Don't like that. So I can remove it. All right, that looks better. That looks better. All right, so take this open and it stays below this range. This will be our first target. This will be our second target. So that covers this gap. This is a 2 up. 2 up. You're inside this range. 2 down. This is this range here. This is this. Okay, so this is this gap. Let's look at it. We're just trying to cover these gaps. This is this gap. So I got a 2 up. This is a 2 down. This will be our third target. All right, so that's a, when I can't get an angle because we're at monthly lows, we're at, are we at yearly lows? May 21? Yeah, we're June. We're at 52-week lows. Okay, what happened? All righty, yeah, that's, so when you can't, so 115, we're not there, guys, but ooh, that looks ugly. But when you're that far off, you're definitely at quarter lows. It's hard to really gauge. So we're going to do it on the daily. We're going to do horizontal lines, and we're just going to say if price trades below, if price trades below yesterday's low, then we're going to just use those daily ranges because it's got to close this gap. All right, now to the upside. Here is, so it didn't take this, it closed below this inside bar. So I'm going to go here on this inside bar and say, if price trades back above this high, then there's a potential for this to go long, but we absolutely do not want to be inside this range. So you see price is in this range. If it's trading in this range, I'm not trading this. The only way I would get in is if I was doing a scalp using the shorter time frames, but I'm not looking for price to continue to the upside without it trading above this inside bar. 2, 1, 2 to the upside, okay? And then of course we got to draw our daily high. All right, so if we were to get this 2, 1, this would be our first target. And then you had this gap right here. But again, guys, you're at a monthly, close, right? 2 days, today and tomorrow. Don't get too greedy trying to jump into this market at the end of the month, end of the quarter. All right, so let's write this up. We're gonna go short below yesterday's low of 151.70 with CCI below negative 100 on 18-minute. All right, so in other words, this is our opening trade. We want to go short. If you see where CCI is here above plus 100, if this does not trade below negative 100 at this open, it's stuck in this range. It's going to be a choppy mess. I will not trade it. Don't trade it. It's okay not to trade the open. All right. So we want this to be below this level, but CCI has to confirm momentum of the trade. So we're not just jumping in just because it's below here. If this is not giving us confirmation, it's just kind of teetering like this, probably going to be a choppy day. Not interested in trading. All right, and we're going to go long above this high, which is 155.77. So we'll call it 156 with CCI above plus 100 on 18-minute. All right. So again, this has to confirm the potential reversal. Because remember, this is a 2-down candle. We want to see momentum to trade this 2 down, 2 up. So I would absolutely be interested, because I love those 2-2 reversals on a daily. I'd absolutely be interested on a 2-2 reversal to the upside with CCI trading up. Okay. That would be it. Now, intraday, if this trades down and crosses back up, guys, you have to see CCI back above -100. Okay, so don't take that trade. Don't try to trade that reversal with it without CCI crossing back above -100, and preferably above 0 for continuation on a reversal. So if it trades down and then crosses back up, we're looking for CCI to be above -100 on a reversal. All right. All right, so we're going to leave it there. Let's see. Yeah, I was looking at, thanks, Jim. I was looking at the 12-month annual calendar, but 52-week low. NVIDIA hit that yesterday, Jim just said. So keep that in mind. It hit 52-week low yesterday. Be careful, guys. We may have a gap reversal in play here. And like I said, I'm absolutely interested if I see price trade back above 156 with CCI above 100 on the 18-minute. If I see that, I will look to go long on a 2-2 reversal on NVIDIA. So Jim said it hit a 52-week low yesterday. All right, so we're going to close it there. Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. As I showed you with Tesla, and which is why I'm challenging myself. If you can trade Tesla and make money, you can trade, yeah, probably any stock. That thing is so volatile because it trains you, it really does train you to be patient. This market requires that. It requires that. And we talk about this all the time. If you have not decided for yourself which time frame you're going to take your entries, then you have already been defeated. You have to figure that out first, guys, because what I'm showing you is if price does this, I want to short the market. But you have to decide which time frame you're looking to take that trade. Do you want to zoom out and wait for a longer time frame to take a potential entry, or a reversal, right? That means you may be waiting for the 60-minute flip. That's okay. Or the 90-minute flip. But if you're looking to get in that first hour of trading, then you have to decide, is it the 515, 618, the 3, the 2, the 1? That's your decision, okay? That's your decision. All I'm showing you is if you're patient and you wait for your setup, there's an opportunity for you to make money if you have the direction right. So we know we want to short NVIDIA below a range. We know we want to go long above a range. Everything else in between for me is simply noise or a scalp. Without, I mean, literally on the shorter time frame. I am not looking at the 60 to 90. I'm just looking to make a couple dollars and I'm out, okay? So you have to think about that if you're trying to scalp these trades. What we do here is plan our day. But if you're looking at trading on the shorter time frames, understand your entries and exits, and be patient and wait for those signals. All right. Thanks, everybody. I appreciate you following me. I will not be on tomorrow, right? Because I'm traveling today. So I'm going to enjoy a long holiday weekend. And obviously Monday is a holiday. We will see you back here on Tuesday. Thanks everyone for joining me. Have a great holiday